Let's find some day trades, swing trades, and option trades. Hello, traders. It is Monday morning, June 29th. We are about 2.5 hours into trading. You can see that the market started off on a gap higher, quickly gave up those gains in my pre open market comments. I had mentioned that the market will not rally until the downside has been tested. And I said that because of the heavy selling that we saw on Friday. Market closed right on its low of the day. Buyers were not going to come in until they knew that that bid was confirmed. Once it was confirmed, we had a nice little rally off of the low. We challenged this resistance level from Friday, and that comes in right at about the 302.50 level. And right now, we're trying to get through that level. A little bit difficult. I would have liked to have seen this right here, a rally to a new relative high for the day. At least it challenged the prior high. Would have wanted to see it get a little bit more elevated. This is what I call a marginal new high. It tells me that there is resistance and that the market's going to really struggle to advance. Seeing a couple of long tails under body, but on a move like this, we had a bullish flag setting up. There's your flagpole, there's your pullback, there's your downward sloping trend line. Boom, boom, boom. Three long green candles closing on their high, but then no follow through right there. That's not a good sign. The longer we sit here, the more likely we are to reverse and try the downside again. So we needed to see that pop right up and through. Didn't get it. So it's a Monday. It's a pre-holiday environment right now with the 4th of July celebration coming up. We've only got 4 trading days this week. We've got a lot of economic releases, so those are going to be really, really important. They crank up Wednesday and Thursday. So on Wednesday, we're going to have the ADP report and we're going to have ISM manufacturing, both critical numbers. It's going to be important for us to see what private sector labor conditions are like. It's also going to be important for us to see what manufacturing looks like. Now, again, I like the ISM numbers because they are surveys. They tend to be forward looking versus all the other economic releases, which are backward looking. So, big numbers there. We've also got the unemployment report on Friday. Now, the employment numbers came out gangbuster a month ago. Much, much better than feared. We're going to see if that continues this week. But there is a dark cloud hanging over the market right now. We've had an increase in the number of coronavirus cases. I'm not as concerned about the increase in overall cases because we're testing more people. But what I am concerned about is that the percentage of positives is starting to increase. It had been running somewhere around the 4.5% range for the U.S. in aggregate, and now we're seeing spikes to 14% in states like Texas. So this is going to really dampen spirits. The economic recovery is going to take longer because consumer spending is going to be rather subdued. People are going to be wondering if their jobs are going to be secure, if they're not seeing the orders come in when they do return to work. So they're not going to spend. And the litmus test for everything, I found this piece of information over the weekend, and this is a really important piece of information from my perspective because I like to gather these little small tidbits. They're gems, if you will. So China just had a major, major holiday. And so the comparisons from this year to last year were fairly dramatic. And China has actually been out of the shutdown since April. So they've got a really good head start on every other country. And so what happened last week was that we saw this uh, festival that China has, and the comparisons year over year were very dramatic. So we know that they had their, excuse me, I'm looking for it. It was the Dragon Boat Festival, and it showed that activity was down 49% year over year. So at the first opportunity, given that the Chinese New Year was spoiled by coronavirus, it's kind of their first opportunity after the economy is reopened to go out and really celebrate. Not a lot of celebration taking place, down 49% year over year, and the revenue was down 69% year over year. So even with China having a 2 month lead on us, you can see that this might actually be where we're at a couple months from now with the consumer really, really being sluggish. So I saw that as an important piece of information. We're going to keep an eye on the SPY right here. You can see how it's trying to challenge this high, but I want to take a look at what the 10P indicator has been doing. This is our governor. This tells us if we should be long, when we should be long, when we should be taking profits on those longs, when we should be short, when we should be taking profits on the shorts. This is what dictates all of our activity. And here you can see that last Friday the market gapped down. We had a pretty substantial decline, and we had that 10P cross right on the open. That ended up being nice, long red candles closing on their low. This suggested that we were going to see follow through selling throughout the course of the day. The market was able to catch a bid. You see a nice little bullish cross here. Market rallies a little bit, got a bearish cross there. We dip a little bit, get a bullish cross here. This was a nice little cross here, and then later in the day, the market closed on its low. I think that there were some adjustments being made by funds. The market had run up dramatically from the March low, and that was the start of the quarter. And so funds that have to have a certain percentage of equities and a certain percentage of bonds had a lot of value, a lot of profits that they had realized because of that market rally. So they needed to sell stock and they needed to buy bonds. That impetus, that influence, I believe, is gone because of T+3 settlement. So I don't think we're going to be seeing that any longer. We should have a positive influence in end of month, beginning of the month fund buying. We should also have a positive influence from the holiday. We should also have a positive influence from earnings season only being about 2.5, 3 weeks away. The tendency is for buyers to be engaged ahead of earnings season. And so we are seeing a little bit of a market rally. And this would also confirm that support at SPY 300 one more time. So we're going to put up the major moving averages, and you can see how it comes into play right in here. We close below the 200-day moving average, but we're back above it. So from a bullish standpoint, I'd like to see us rally just a little bit. That would give me the confidence I need to start selling some out of the money bullish put spreads heading into earnings season. So as we take a look at this longer term chart, you can see we're overextended on the upside, had a little bit of profit taking, 1, 2, 3 tests of the 200-day moving average. We rally back up, 1, 2, 3 tests of that moving average. The more times that we test that 200-day moving average, the more significant it becomes, and it also is something that we can lean on because now we know that there are buyers, and buyers are watching that. They're thinking, yes, I'd like to get long here, but I want to make sure. Now that we have 2 tests under our belt, I think the market is poised to at least go sideways into earnings season, into this holiday. Everyone's going to wait for clarity. It's not good that the coronavirus is starting to spread and that's accelerating. It's not good that consumer spending will probably be dampened by that. But the Fed is standing ready to engage in more quantitative easing, and we know that fiscal stimulus is also being considered, a $1 trillion infrastructure spend and possibly a $1 trillion PPP extension. So those are the influences in the market. I can make an equal case for why we would go down. I can make an equal case for why we would go up. That tells me that we're going to have a tug of war, probably stay in a trading range, and we're going to be waiting for that clarity. So this is a low probability trading environment. We've got some decent economic news coming up this week. So that could be a market driver for us. We have to wait for the market to show us for sure that there is some directional movement, or we can expect it to just go sideways. That's okay too, because it sets up well for out of the money bullish put spreads. So I wanted to mention that yesterday I sent out a video last night, and I highlighted some stocks and I highlighted a search on it. And one of the stocks that was on there, I'm actually going to highlight today as one that I think will play well for either a swing trade selling out of the money bullish put spread or for just getting long on a day trading basis. And you can see MTCH right here. It's in a nice rally. This came off of the heavy buying surge this morning. WKHS was another one that I was on. This one I was on very early in the day. So out of the right side, I'm going to put up the M5 S&P 500 so you can see what it's doing. And then we're going to move this in just a little bit so we can see the beginning of the day which is right here for the SPY. Down, 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 stock. Gap higher, long tails under body, holding support, holding support, holding support. So I got in here. I took a 30-cent profit on this stock, which is not bad for a $12 stock. That's a really nice gain, especially in a lackluster market. But once I saw this 10P bullish cross right here, I knew it was time to find stocks with relative strength and to get long. This is a nice play for me. Stock continues to show some decent relative strength. So I like WKHS, but you already knew that because I've highlighted this in the previous week. MTCH was on the list last night. You can see how that same thing through the prior day's high on the open. Okay, that's pretty interesting. Market sells off, stock is able to maintain and hold that low of the day. No problem there. That tells me there's support. As soon as it gets above that prior day's high, right in here, hello. I didn't get this whole ride in here. I took a small profit on the trade. I wish I'd have held on a little bit longer, but my MO right now is I don't want to lose money. I'm trading half of my normal size in the morning. I'm trading a quarter of my normal size in the afternoon. I want to be able to make maybe 4 or 5 decent trades. I do not want to lose money, so I'm setting passive targets, trying to get through this dead spot in the market. So, yes, I missed some upside to it, but still very, very nice looking chart. I think that CHGG sets up pretty well. Take a look at that one, and you can see how it's through the prior day high, long green candles closing on their high. Take a look at that daily chart. Here's what I like about the daily chart. There's your resistance. There's your breakout. We come back. We challenge that resistance. Now we're right back above it. Now it's support. The stock looks to me like it wants to go higher. Big gap higher after earnings. There we also get almost a 1, 2, 3 test of that support. That gap is going to hold for sure. I like this stock. I think it sets up well. It wants to move higher. So those are some of the stocks that I'm watching, and I have to favor the long side still because we're above that 200-day moving average right here. We're also above horizontal support at SPY 295. We're above the 100-day moving average. So until I get a major technical breakdown, wham, 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 closes definitely below these major moving averages, closes definitely below this horizontal support. Okay, that tells me that the sellers are in control. Until I see that, they're not in control. And you have to follow what the market's been doing, which is a gradual drift higher. So it's too early to do any shorts. And I think that time premium decay will hurt anyone who's buying puts. You have to be a premium seller, and we can still lean on these major market technical support levels. And as long as they stay intact, and as long as we focus on stocks with relative strength, we're going to be in good shape. So that should be your tactic. Let's see what else we can find here. RAD really took off today. The stock is very choppy, so this is not one that I would want to swing trade or hold overnight. It's been a nice day trading stock. Plug has been very, very strong. This is also a nice day trading stock. Might be able to hold this one a little bit better overnight. You can see that it's been strong throughout the course of the day. So that's a nice looking stock. BBBY, I'm not huge on retail, but I do like the fact that this stock's been able to get through horizontal resistance and get above the 200-day moving average. On this one, I would probably only day trade it from the long side. And let's take a look at ZYNE. That's also getting through this horizontal resistance level. That looks pretty good too. This is a relatively inexpensive stock at $7. That could set up well for a nice swing trade also. Relative strength 30. We'll take a quick look here. NVIDIA may be good, but it's down. Facebook, didn't see a lot that I like there. That is a long red candle closing on its low. It's going to have to show me a little bit better support here before I want to go in and buy Facebook. BYND was a really nice short for me today, and I feel that this stock is going to roll over. Horizontal resistance, nice breakout. 1, 2, 3 tests of support, and nope, can't hold that support. This is what I call a failed breakout to the upside. That tells me it's got downside. I think this would set up well for a bearish call spread, but we're not doing those. So what I would do is I would day trade that from the short side, and I'll show you a short that's set up very nicely for me this morning. We'll go back into that SPY 5-minute chart. So here we've got the market rallying. Here we've got the 1OP indicator cresting. We've got a bearish cross right here, which tells us we need to be careful with our longs. We need to take profits on our longs. Saw this bearish hammer right here. Thought this would be a good entry point for a short position in case we rolled right over. So I looked at BYND, and that came into play right in here. And you could see how at this particular time, the market is compressing, compressing, compressing. What's the stock doing? It's going down. There's weakness. This upward sloping trend line has been breached on a 5-minute basis. So I shorted the stock in here, took a 50-cent profit on it. Didn't want to overstay my welcome. You can see how the stock has bounced. You have to set passive targets in this market environment because you can't count on any move being sustained. It's probably not going to happen on a Monday. And we can see from the price action that everything's getting super, super congested, super compressed in here. So I think that BYND does set up well for a short. I also find another short that I think sets up well, FSLY. And the reason for that is that it's gone parabolic, upward sloping channel through the upper end, bearish engulfing pattern. Got to see if this bearish engulfing pattern holds through the course of the day. You've got an up market and you've got a down stock. Looks to me like the stock is getting a little heavy. This may set up well for some day trading shorts. I would not want to short this stock overnight because I have not seen enough confirmation that this is going to result in a pullback. Right now, could have just been a round of profit taking and then zoom right back off to the races. So I don't want to get caught in that trap. But if I start to see long red candles closing on their low and I start to see weakness relative to the market on a daily basis, then yes, I think this could set up for a decent short. Perhaps it comes back down to this breakout around the $48 level or so. Lots of searches that we have, bullish side, bearish side, 1OP indicator. We use that as our governor on a 5-minute basis for the SPY. Look for a quiet trading day the rest of the day. Tuesday could also be fairly lackluster, but I think we could see some fireworks Wednesday and Thursday on these big economic releases. And overall, keep your powder dry. This is a low probability trading environment. So there are times when you just do not want to trade. This is one of those times, and I get questions every day. Pete, I put this position on. What do I do? It's going against me, and I really went big on it. You're not following what I'm telling you to do. Stay on the sidelines. Why have you been doing those trades? So, yes, you can play that game and you can go in and trade big size in a sideways market, low probability environment. Only problem is you're not going to be around in the fall when the really good trading opportunities come along. So, please heed my warning. And if you like the content, please give it a thumbs up. I do want to give you a heads up on something because I have started to post comments and trades to my YouTube or to my Twitter account. So you can go to Twitter. The Twitter address is One Options Trading, and here you can see I posted a chart on FSLY and the short that I took earlier today. I also posted another chart on WKHS, so you can come in here and you can see what I'm trading early in the day. In the description part of the video that I'm posting today, I'll make sure and have a link that you can click on to go to my Twitter channel and to follow me. I also post market comments before the open each day so that you can see how I'm positioning myself, what the driving events are, what I believe the market's going to be doing, and I separate the comments out for swing traders and for day traders. So please look for that link in the description section of my YouTube video and follow me on Twitter, and you'll be able to get a little bit of a jump on my daily video that I post every day. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these trades. Thanks, everybody. Keep it light. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.